Hey everyone, it's Mike from Orderflows here, and I just want to tell you about this market software research tool that you might be interested in. Everyone always talks about finding high percentage trades, the trades with the 4-to-1 reward to risk ratio and so on, and then just leave you to it. What this software does is it finds you high percentage trades and shows you their success rate in the past, the average profit per trade, and much more. So at a click of a button, you will know what futures contract, stock, or Forex pair to buy or sell, when to buy or sell, the trade's winning percentage and average profit, and a few other things. So watch this video and you'll learn more about the software. And if you stick around to the end, you can see how you could save about $100 off this software even. So again, it's not very expensive, but it's really, I think, a very useful tool. I said it's very rare that I promote another trading software product. But I have to be honest to tell you that this software can really open your eyes to some amazing trading opportunities. I even own the software, so I mean that's how much I believe in it. So let's get started. It's called Trade Miner, and they have three modules. They have a stock module, a futures module, and a Forex module. But before I get started, really quick, you always got to go through these disclaimers. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or making any other type of investment decision. Futures trading contains substantial risk and it's not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Basically, don't trade with money you can't afford to lose. I mean, that should be common sense, but still, not everybody heeds it. So this software, again, it's called Trade Miner, and the reason why I believe they called it miner is because you're really data mining past history of the futures or the Forex pair or the stocks, and it's really easy to use. So you can see here on my desktop I've got the Forex version here, the futures version here, the stock version here, and all you do is you just click on it and it pops right up. Very, very fast to load. Boom. Yeah, that's it. That's how fast it loads. And to use it, it's very simple. You just start here. Step 1. There's step 2. There's trade alerts, settings. There's a lot you could do with the software, but I'm just going to show you the real basic stuff, the research part of it on how to use it. So what you want to do to find trades is you go to the month that you want to look at. So we'll look. Right now today is February 11th. Well, I don't know. Let's start here in February. And there's a few parameters you can play around with. Find trends that have won at least 90% of the time, showing both bullish and bearish. List trends that have at least 5 trading days, but not more than a certain amount. I leave it blank because I want to see all. And mine at least 10 years of history. And then you just click Dig Now. Okay. I mean, there's a few other things here, but again, I mean, you could figure that out when you get the software. And you can see it's running through its calculation right now. It's going through the database of data, mining the data, and looking for these profitable trades. So you can see the results, 201, and there's a score. It tells you the trend, the symbol, the instrument, starting on, ending on. When you should get into the trade, when you should get out, the win percentage, number of years, calendar days the trade lasts, average profit, return on money, average profit, for the trade, average profit in ticks, risk reward, average daily profit, max gain, so on and so on. The margin per contract, and there's what they have the score. It's a weighted score. I'm not going to get into what it is, but the higher the number, then technically the stronger the trade. I have it filtered by score here, so it has the highest score on top. So let's just take a look. Okay, so the first one is bullish, bean oil. Get long on February 1st, get out on the 13th. The 13th is just Monday. I said today's Saturday. I'm recording this. And, let's see how it looked. Okay, so it's get long, March bean oil, ZL. Here it is. February 1st. Let's see if we can expand this up a little bit. Where's February? Here we go, February 1st. That's the 31st. Here's February 1. So you can see it's giving you, assuming you'll be getting in long somewhere near the open. That's 33.65. And where to close on Friday, 34.65. So that's a nice move. That's a profitable trade right there. And you go down, you could see there's different contracts, bullish, bearish, different contract months. There's really a lot. There's 201 here. Let's go back, look at January. January just ended. Let's see if some of these trades were profitable or not. Again, this is how fast it works. It's doing the calculations right now as I'm talking to you. Okay, so it's done. So let's see the top one, bearish crude oil. Okay, get short on is bearish, so you're getting short on January 4th. Cover it back on the 25th. Okay, it was crude oil. It was May crude. What is it? Get short on the 4th. Where am I here? That's not it. So the 4th is where? Oh, that's the 3rd. That's too bad I didn't tell you to get short on the 3rd. But anyway, this is the 4th. This is the open 53.26. We trade up. Actually went against the all the way up to 55.02. But let's see, we're closed on the 25th. So again, you're looking here, 53.33 roughly, 53.28 we'll call it. And then on the 25th is where you're covering it back. 52.90. So it was a small winner, and this is just the raw data, right? Don't take these trades strictly off. Get long on this day, get out on that day. Try and work with the fundamentals that's going on in the market at the time. There's other ones here. Probably stay away from things like the dollar index or any cross rate that involves the dollar. I can't say cross rate involves the dollar, but any market that involves the US dollar in it, in the sense of being a foreign exchange product. And I say that because there is a Forex model. I'll show you the Forex module rather. But the reason I say that is because with Donald Trump being the president, there's a lot of uncertainty in the global financial markets, and it's going to have a direct effect on the dollar. So maybe some of these trends, you may get some monster trends in the currency markets, but I don't want to take that risk because something is said or misinterpreted that comes out of the president's mouth. It can have an effect on the market. So just look at some of these other ones here. Gold here. I know gold was up in January, and this is bullish. It's got a score of 1.56. Buy on January 3rd. Actually hold it on the way until May. So this trade should last about 2 months. 58 days. I know this one's in the money. I know gold is up for the year. Let me just take a look. This April gold. Buy it on the 3rd of January. Where's Jan? Here's 2007. So here's January 3rd, first trading day of the year. Where are we trading? Around 11.54. Where are we now? 12.35. So 11.54 up to 12.35 in the gold. And that trade's still ongoing. I don't know. Let's take a look. I honestly, I haven't Nikkei. I don't know if I got Nikkei on my charts. Again, I'm just sort of picking at some of these. I'm sure some work, some don't work. I don't know which Nikkei they're using for this. Whoops. I assume CME. But again, you have CME, you have SGX. It could be either one. I don't know. It's bearish. What did it say here? Bearish. You're selling it on the 4th, covering it back on the 11th. Let's see. I don't know. I don't know. I don't remember off the top of my head what the Nikkei did there. Well, first we'll start with SGX, the Cymex one. Where's the 3rd? Here's the 3rd. So you're selling it on the 3rd, 19,210. It's a small, because I know the 3rd of January, I believe, is a trading holiday in Japan. And covering it back on the 11th. Well, the 11th was January 11th. 11 was a Wednesday. So here. So, this one didn't work out. How did it look on the CME? CME is not going to be much different. Nikkei dollar. Well, it's dollar denominated. So about the same. Buy it here. Whoops. This is the 11th here, or the 3rd rather, January 3rd. It's bearish, and this is the 11th. So, it's, that one didn't work out. It went up against you. It was telling you to get short. So, not every trade is going to be working out. You should have stops as well. Let's take a look at, so that's the futures module. Me personally, how I would trade it, I would look at the trades with the longer duration, longer calendar days. Well, here's a nice one. Well, this one's got a score of 0, but it's mini Dow. Okay, well, where Dow's been doing. And that's telling you to get long at the end of January. If you support Trump, you'd be getting long. But let's see, where's Jan 31? So this is January 31. It was actually a big down day that day. But, say you got short here. Where are we now? You're getting short at just below 19,900. We're trading above 2,200. So it's already 300 points in the money. Honestly, something like that, these longer term trades, I'd be looking at options. You could trade options on those. I can buy some out of the money calls if I'm expecting the market to go up, or do the puts on the way if I'm expecting the market to come down. Let's take a look at the Forex version. Again, it was very similar. It just says Forex up here in different color. And, where are we? February here. Okay, this one's set between up to 6 days. 6 days is not very long. Let's see how if it looks any different here with this. Okay, so where are we right now? Today is the February 11. Okay, well, these are just trades. Let's take a look at January. It's probably better. I could give you some examples of what happened. Okay, so what do we got here? Let's take a look. The first one, Euro versus New Zealand dollar. Short on the 15th, cover it back on the 26th. Euro, New Zealand, EUR. So I don't have these there. So again, some of these are new. We'll take a look at a couple of these. Aussie dollar, Swiss franc. Aussie, Swissy. And Euro versus Canada. Again, me personally, I would just, the fourth one is New Zealand versus U.S. dollar. Then you got U.S. versus Canada. I would just stay away from those U.S. dollar pairs for now. Because I said, who knows what's going to come out out of the White House or anywhere, and it's going to have a profound effect on the exchange rate with the U.S. dollar. I think some of these might be a little bit more stable. So we'll start here. Euro versus New Zealand, bullish on the 15th. Okay, where are we here? $15 was a Sunday, so it'll be the 16th. Where are we trading here? Around 149.19 until when? Until the 26th. So from this one down to the 26th. So this one, this one didn't work out. Okay. Now, one of the things you can see also with this is it shows you the last 10 years down here, what sort of profits there were on these trades to be had. Aussie versus Swissy. Again, you can't, I don't, I wouldn't trade it where I'm just taking every single trade and, just blindly taking it because it says buy it on this day and sell it on that day. No, you should, when you're trading sort of when you're trading something like this, try and wrap it around with what you're thinking the market is doing. If you have a view, because maybe across a moving average, I hate to say across the moving average, but a lot of people trade Forex with averages, unfortunately. But I mean, use it with the way you're trading. If you're a bit of a longer term trader. Let's see here. So this one is Aussie versus Swiss, and it's bearish on the 15th of January. Where's Jan 15? Again here until the 25th. So that's what, 75. What's up here, around 75.62 until the what day? The 25. It's 24, 25. So this one was about break even. It went up, it went down. So it had a very small return. Although you could see, it did have this one big one, this one outsized one here. But honestly, the rest of these, they're all kind of small. Euro versus Canada. Okay, this one's kind of mixed. You see, the last couple of years kind of small. Had some nice big years in there. Had this big loser there. But let's take a look at how it worked. Euro versus Canada. Okay, so you're getting shows bullish on the 10th of January. Where is the 10th of January? Okay, so this is the 10th of January right here. Right, you can see 10/1/2017 down there on the bottom. So that's 139, call it here, 139.71, 72, 73, somewhere in here. Okay, we'll call it, say you got long here at 140, the figure. Actually, the 10th, and you hold it until the 19th. Where's the 19? Ooh, that's 18. Here's 19. I don't know if you're going to be getting out on the, near the open or near the close. I'd imagine you'd either be getting out somewhere, I don't know. I'd imagine you'd be getting in near the opens and out near the closes of the day. That just makes sense. You're holding it. Otherwise, it would say the previous day would say the 18th. But so, this is a nice move. We'll call it 140. Even if you got out here 141, it's 100 pips. Up here, even it's another 100 pips, so at least 100 pips out of this trade. So as you can see, there was one winner, one sort of break even, one loser. Just on these three. Again, I'm not going to go through all of them. Just get the software and and play around with it. I think it will definitely help your trading. And what do you got to do? Just basically go, on this web page, scroll down to the bottom where I have this. Click here to get Trade Miner, and what you do is you click on there. It takes you to this page. This is what it looks like. Scroll down to the bottom, and they have the special deal. You could get the stocks, the futures, the Forex. I showed you the futures and the Forex modules. They have a stocks one. I'm not a big stock trader, but if you get these two, otherwise you can get a single market, and it's $97. So basically, as long as you buy, the futures, if you trade futures and stocks, then you get the Forex for free. If you trade Forex and stocks, basically you get two of them, and they give you one extra for free, which is worth it. And it includes the historical data going back 40 years. Each year, they got new data that comes out, obviously, and you want to get the refreshed database. After a year, it costs you that, and you get a lot of other stuff you could do with the software, actually. But again, I just showed you, the basic fundamentals of how to use it. Honestly, there's a lot to it. And again, for the price of $194, it's not expensive. As far as research tools go, especially for trading. I'm sure, I know I've spent a lot of money on software that was just pure crap. I sell software. And, again, $194 is considered very cheap already. And actually what you get for it, it's got, it's great value. It's got a 30-day money-back guarantee. You can see right here as well. So, again, I don't think you go wrong with this software. Even if you just get, a couple of, say you just take the top 5 trades a month, out of the 200 that you just saw, like in the futures, you just take 5 of them, and if 2 of them are winners, but big winners, and maybe one's a scratch, the other 2 are losers, then then it's worth it. I said it might be worth it. You trade some of these longer term trades, for that last for months. Maybe buy some out of the money options, and just sit on them. You can buy them for really cheap. I might do that actually. I've been thinking about it. I've been talking to someone that trades options, and he's trying to get he's trying to win me over. I've never been a big options guy. For me, options is basically, at this stage in my life, it's just basically buy calls and buy puts. I don't get anything more fancier than that. Maybe some straddles or some things, but again, that those days are past me. And so there's definitely ways you could use this in your trading. There's other things that they offer, but at this version, this $194 version for the 3 modules, is money well spent. I mean, again, you won't look back and say, oh, this was a waste of money. Some people might actually, but for those that want a starting point on some profitable trades opportunities, this is a good starting point. So thanks, and hopefully you'll find some value in this software, and you could use it in your trading. So thanks for watching this, and bye bye.